Hi, this is TradingETFs.com. Today is January 14th, 2016, and this is the ETF update. And so what I want to do is go over three different ETFs today. We're going to go review the IWM. We're going to take a look at the Diamond ETF, the DIA, and then also we're going to follow that up with the VXX. So if you looked at my video a couple days ago, 2 days ago, in fact, I had said that these dots were still widening, which suggested that we still have more downside. And we did get a little bit of a move up one day, and then you can see here we just completely fell apart once again. Today we got a pretty decent move back up in the IWM. But if you can look at the oscillator, you can see that the oscillator is still moving to the downside. And take a look at the gap. Still, it's a wide gap here, which means from our oscillator standpoint, momentum is still increasing to the downside. Even though you got this move today, which was 1.39 or $1.39 in price move up, didn't affect the oscillator from a standpoint of direction. So that's an interesting situation where even a 1% gain, actually the amount of gain for the IWM today was 1.38%. So even with that amount of percent of a gain, it still didn't have an effect on the oscillator in terms of direction. So it's an interesting situation that we find that the markets look extremely weak, and we're getting this oversold rally, but it appears as if we are going to continue to head to the downside. Taking a look at the short-term oscillator, you can see here that we have a little bit of a double bottom here, and we're trying to move to the upside, and all it's going to do is alleviate the short-term oversold reading. That's it. There's really nothing here that would suggest that we're ready to turn or even stabilize by going sideways. If the market's going to change direction, we're going to see some type of stabilization, considering the amount of damage that we have, and we just don't see anything right now. So right now we're just going to let the oversold rally continue as high as it can. But right now it's definitely setting up for the market to continue to the downside. Let me switch over to the Diamond ETF, and we'll take a look at where that oscillator is at. So here we have the Diamond ETF, and 2 days ago I had said that we could expect maybe a day or two, or even $1 or $2 of movement to the upside in price, and yet the very next day we were already heading back down. And so today we get another move to the upside, but again, it didn't change the direction of the oscillator. It did slow down the amount of gap here, so that means that momentum is still increasing to the downside, but not at the same rate that it was previously. So right now we're just waiting to see when this rally fizzles out, and that most likely will set up the market to turn and continue to the downside. We're seeing here in the short-term oscillator, we've got 2 days ago we had a little bit of a move up, and then we completely just fell in price again. But if you notice here, what's interesting is that we do have a higher low in this oscillator right now, and so that's a pretty decent sign that we're going to see the price continue to rise. Again, maybe we'll get into the 167, 168 price range before it stalls out, but it's something to definitely just kind of keep an eye on here. A lot of times when you see a higher low in the short-term oscillator, price will continue to move to the upside. And so that's what we're looking for at this point. But again, there's a difference between a short-term rally and a long-term rally. And looking at the long-term rally or the long-term oscillator, getting a couple-day rally doesn't necessarily negate any of the technical damage that we've done. So we're still looking right now for lower prices in the coming days and weeks for the Diamond ETF. And I'm going to switch over to the VXX. We've been watching this since December 28th. Here's where the oscillator was at. I had said that we were looking for a big gap up to the upside. We got the gap up here in price. The oscillator gapped up, and then it's continued to the upside. And even though we have not taken a position, I'm still waiting for the short-term oscillator to come down from the overbought area, and I'll show you in just a second here what that oscillator looks like. So still we're here up in this overbought area, so you don't want to take a position when you're in the overbought area, because then your risk to the downside, once you take that position, starts increasing. So what we're looking for is we're looking to be able to get the oscillator somewhere around the zero line, which is what we've been waiting for. We haven't been able to get that, so therefore we haven't been able to enter into any type of a trade. But right now that's what we're looking for. And from my standpoint, we are still setting up, in my opinion, to be able to not only get to this $27 price range, but we should be able to get up to this $29 price range, if not more. Because again, there's a lot of technical damage in the market, and the one thing that I see is that since everybody is waiting for the Fed to come in and make some positive comments, or someone to come in and try and bail out the market, there's not a lot of panic. There's not a lot of fear. Everybody just believes that, well, if I just hold on one more day, someone will come through for me and take the prices back up. And so there's not a lot of panic. There's not a lot of fear. And so I do think that when we do finally start moving down again, after we get the short-term oversold readings, to move off of the deeply oversold area. For instance, what I mean by that is here we're in the short-term overbought area on this VXX ETF. And even though there's been some concern by the market, it really hasn't gotten to the panic stage. And so I do think that we're going to need to get to the panic stage before we were able to see the market start moving to the downside. And so what we're waiting for is the oscillator to come down closer to the zero line, if not a little bit under the zero line, making everybody feel like the worst is over. And at that moment is when the worst will start coming, because again, we have a lot of people that are complacent, a lot of people that are just holding, hoping that everything's just going to turn. And I don't believe that that's going to happen. But you know, the market will dictate what's going to happen. Right now, we're just not in a position to take any type of a trade at this point, but we are just kind of sitting here watching. And so far, we've been reading the market right in terms of the direction. So there's no reason to force any type of a trade right now. The best thing to do is just be patient and let everything play out the way it's going to play out. Take a look at the oscillator, see if we can get it in a better position down here so that we can reduce some of the risk to the downside when we enter a trade. So that's about it for tonight, and I will update you again when I see something that needs to be updated. Thanks very much. Have a great night.